We've seen industrial land values perform really strongly over the past decade.
Many view residential property as a really long-term game.
I still think there's a lot more people trying to understand more about commercial property.
It's safe to say that most, if not all, property investors have the same goal: to come out better financially than when they went in. But how can you crack the winning formula when it comes to property investment? While residential property is often the go-to for those mum and dad investors, is it always the best option? Or are we being too narrow in our thinking? Could investing in commercial property offer a better yield? Joining me to unpack the data and settle the debate is Anne Flaherty, Senior Economist at Proptrack, and Josh Almond, Mortgage Choice Broker at Mortgage Choice Brighton, who has worked in both commercial and residential lending for 20 years. Thank you both so much for coming on the show. I do feel like I'm in good hands for this episode. How do you assess residential and commercial? Is it the same way? Is both assets looked at in terms of, say, capital growth, rental yield, demand for renters, location, etc.?
Yeah, look, I think from a lending perspective, we certainly view them very differently. When it comes to residential lending with you or residential purchasing, you've got an investor which is going to need to contribute, say, 20% plus stamp duty costs, whereas on the commercial side, they may need to contribute, say, 25 to even 40% plus stamp duty costs. So there's a big difference there. And then the fundamentals around how they get that loan can be viewed differently as well. So there's a few key differences around the lending aspect, if you like, which we always will step through with a client. I think what we've seen, particularly in the last 2 years, we've seen a lot more mum and dad investors probably consider commercial property, just given what's happened in the residential space over the last 2 or 3 years as well. There's a lot more growth that's been seen, and we've certainly seen them wanting to come to people like me and real estate agents and the like, trying to understand and educate themselves more on, is a commercial property investment more attractive to them or more palatable to them, or obtainable is probably a better word for them going forward.
And do you have anything to add to that? Like, when you look at it from an economical point of view, do you assess both types of investment on the same criteria?
I think a lot of it also has to do with the objectives of the investor. If you're just purely looking at capital growth over the long term, that's very different to, say, if you're chasing yield.
Yep.
Now, a lot of what attracts people to commercial real estate in particular is it tends to be higher yielding. It is a higher risk asset class, but for those investors who are looking to just generate a strong yield on their investment, commercial is often the go-to.
What factors play into residential and commercial investment? Residential, we can actually kind of predict what areas are going to boom based on things like population growth, demand for renters, et cetera, but is commercial the same?
In many ways, the drivers are quite similar. We know that areas that are seeing very strong population growth, that's great from a residential perspective because people will want to move into those homes. Where we see populations grow, we often see businesses grow and jobs grow, which of course is good for commercial. The other factor I think you'd say is, what is the local economy like? Is there a strong demand for, is it retail space? Is it more industrial area? Could it be a local laundromat that's going to do really well because there's a lot of student apartments going in? There are a lot of crossovers in determining a good area.
What is the commercial investment industry looking like at the moment?
The main types of commercial property we think about typically are retail, office and industrial, but of course there's everything in between. So childcare assets are very, very popular. We can have obscure kinds of assets like local swimming pools. We could be talking about strip retail, shopping centres. So you have a really, really broad spectrum there. Another asset type that's actually very popular is service stations. So they're typically seen as lower risk. They generate a good income for the investor, and actually they're often located in very, very good spots.
They're always going to be in demand.
Exactly. And a lot of the best performing commercial property types are those that are lower risk. So, your childcare centre, we know that they sell actually on very low yields because they are perceived as being lower risk.
Who's typically investing in commercial?
The barriers to investing in commercial are actually a bit higher than residential, particularly because often you're looking at a higher investment starting point. So whereas in residential, people are typically investing below that $1 million mark, in commercial, that's really probably your starting point, and it goes much, much higher than that. So that would be a key consideration.
Yeah, look, I think from my point of view, certainly over the last 10 years, we've seen a lot of people that are how you would say probably self-employed or running their own business that are looking at different ways to try and invest. And obviously they invest a lot of time and energy and cash flow into their own business, but they want to look at other things as well. So they'll look to try and potentially, if they're running a business, they might want to have office space, warehousing. So they're looking to buy something that they could potentially occupy their own business in and see that as another form of investment. We're also seeing mum and dad investors come in as a typical sort of commercial investor now coming in around, say, the $800 to $1 million price point, where they may deem that it's appropriate or, again, obtainable for them to get into the market. But certainly from where I sit, there's a lot more in that self-employed category where they're wanting to get into their own property and operate their own business, but it's still seen as an investment, even though, it's classified as owner-occupied. In their own mind, it's investment for them as well.
So how is this differing from the typical residential property investors that we see? And who are they?
It all comes down to the investor, of course. That, idea of the mum and dad investor is really your most common type of investor in residential. We definitely see that in commercial as well, but then we see a lot of other types of investors. So bigger investors, businesses who invest, institutional capital at the high end. We see a lot more overseas investment into commercial in Australia as well.
And can you give us a brief explanation of what actually is rental yield? And then typically what is a good or average yield in the current market for both commercial and residential?
So in simple terms, the yield is basically the rental income that you're going to get from that property divided by the actual value of the property. So in other words, a higher yield means you're getting more rental income relative to the underlying cost of that asset. In residential, it is perceived as a lower risk asset class. So you're typically looking at yields at the moment between about the 3.5% to 4.5% range. In commercial, 4.5% would probably in most cases be your starting point, up to as high as perhaps 8%, even higher depending on the asset. And the reason why we do see those higher yields in commercial is to do with that increased risk. Whereas with residential property, you might see maybe a few weeks of vacancy. With commercial property, you can see significantly longer periods of vacancy when you're not getting that income coming in. So that is reflected in those yields.
Josh, you mentioned it briefly before, but what sort of deposits are you looking at for each investment type as a percentage of overall price?
Certainly from a commercial perspective, Anne's alluded to it as well, there's a lot more outlay that a client or an investor's got to make, and depending on the asset type they're buying and depending on their own circumstances, it could be anywhere between, say, 25% or even 40% plus any sort of stamp duty costings that go with that purchase. So it does take a lot more of the client's wealth, if you like, to get into that type of property.
Absolutely.
So they need to take some careful consideration before they move with that, for sure.
Can you give us some examples of what an ongoing cost might be for a commercial versus an ongoing cost for, say, a residential property?
In terms of the property itself?
Yep.
Yeah, certainly from a residential perspective, I think it's pretty black and white or clear cut. The owner or the investor is really, they're wearing all the costs, if you like. And if it's a house or an apartment, then you've got someone obviously as a tenant renting it. So they're using, utilities and the like, and they're paying for that as they go. Commercial is very different. It's a lot more heavily negotiated, if you like. And I think any prudent investor is going to do enough research to ensure that any purchase that they do make has a tenant that's associated with that property. And generally speaking, the tenant is going to make sure that the lease agreement will stipulate that they're making the cost or paying for all the costs that go with that property. So they could be rates, land tax, insurance, any repairs and maintenance on the property as well. So, the investors really focus on probably, making sure that they've got the right tenant, but they're probably just focused on paying the debt really as their main source of expense going out.
Something that fascinates me is negative gearing. When you negative gear a residential property, it generally is a tax outcome. So you're paying more for the property than what you're making. Can you negatively gear a commercial property as well?
You certainly could, but I do think it is not a common strategy to purchase a commercial property purely to get those negative gearing benefits. People are looking for income generally when they purchase a commercial property. They're not so much looking for a way of reducing their existing taxable income.
In terms of contract and lease agreements, Josh, what are the main differences that could concern an investor between a commercial lease and a residential lease?
I think the major component of that is really, you've really got to understand who the tenant is. And obviously that's with the lease. that's associated with that. But you need to be doing the right level of research and due diligence on who the tenant is and what industry they're in, and more specifically, what are the terms of the lease that's been agreed to, previously to you coming in and buying that or potentially buying that property. So again, at any stage, we'd be getting the client to get in and refer or review that with their solicitor or a conveyancer to make sure that they fully understand what that looks like. I think, from a residential perspective, you're going to have somebody to review their contract for a property, but there's not as much of a review, if you like, of maybe a potential existing tenancy that might be associated with a residential property.
What type of commercial property have your clients gone for in the past?
That's changing, I think. Certainly years gone by when retail was booming, that was something that a lot of clients would look to undertake and bring into their portfolio from an asset position. But I think over the last even 5 years, it's probably, given retail here in Australia is probably on the decline. From a shopfront perspective, that is, I think people are tending to step away from that, and small offices or even larger offices. Warehousing is a big one now. Well, we do have certain hubs here, particularly here in Melbourne and other cities and even regional cities where you've got people wanting to purchase warehousing for that reason.
What about residential? Like, historically, houses have outperformed apartments in terms of investments. Is that still the case?
Yeah, I think so. I can certainly see from a land perspective, that's where we're getting continued growth, or clients are getting continued growth over apartments. And, not to pigeonhole apartments and not to buy them, but I certainly think that the greater level of growth is across that property with land.
And how accessible or inaccessible maybe has residential investment become in the last few years? What is activity looking like in that market at the moment?
Well, interestingly, we saw a big boom in investment during 2021 when interest rates were very low. But then once interest rates started increasing, we did see investment activity pull back a lot. We are actually now starting to see a return of investors around Australia. And I think if you look at the long-term fundamentals of our property market, we have a strong growing population, which is going to create the need for more homes. And we currently have an undersupply of homes, which is driving rent growth, property prices up, all of those things. So the fundamentals for the residential sector are very strong right now. And I think that's why we're seeing increased investment. But if we look at the commercial space, we really aren't seeing that at the moment. Mm-hmm. So just as we saw with residential, in 2021, there was an absolute boom in sales activity. It was the busiest year on record in the commercial sector. Since then, things have really been in the doldrums. One of the reasons for that is that commercial values have been much slower to respond to higher interest rates. So we've seen this disconnect between what vendors are willing to accept and buyers are willing to pay, which has really led to a slump in sales activity. We could see that reverse over the coming year. We're seeing that price expectations gap close somewhat, and we're actually seeing a rise in the number of properties being listed for sale on Real Commercial at the moment, which signals that a lot of vendors are just looking to get deals done.
Something I want to touch on is government policy, I guess, like renters' rights in Victoria. It does make it a more challenged market, I think, to attract investors. Does commercial investing have the same issues or anything that might impact those considering taking this route?
I think when it comes to business leases, there's a lot less in play in the political landscape. Mm-hmm. So you don't see that same thing. And the conditions of commercial leases are very different. So often the actual tenant or business leasing that space is responsible for a lot more of the costs associated with that property compared to the landlord.
Josh, has this been your experience with investor clients in the last couple of years? You've noticed residential dropping off?
Yeah, certainly. Yeah, I think even more so in the last 12 months even. If I think even this calendar year, there's been probably the quietest in terms of inquiry around residential. I still think there's a lot more people trying to understand more about commercial property. I think, and I also think it's probably a longer lead time for from day one when they actually, a mum and dad may think about buying commercial property to when they actually do buy it. It could be years.
Do you have any anecdotal kind of feedback that you can share with us about, I guess, what your clients are saying in terms of why they are dropping off residential investment?
Look, it goes to probably the interest rate increases over the last 2 years. That's the easy one, if you like. I think also from a land tax perspective, I know I keep focusing on Victoria because we're here, but that is largely the reason why too. I also think if you go back to the first point about interest rates and it being higher for the last 2 years here in Australia, I think it also makes people think differently around their other debt they might already have and maybe debt they hold in their home. So it's probably a bit harder for them to pay that off as quicker or as quickly as they had been for the years prior. So they're probably wanting to focus more energy and attention on getting their home paid off or a lot more of it paid off before they start investing. Those 2 or 3 things are probably the key fundamentals as to why.
Something that we haven't touched on yet is the time investment side of things, because many view residential property as a really long-term game. Like you might hold that residential property for the 30-year loan period that you've taken out and then sell the house for all profit, and it might be a way of safeguarding your retirement. So do commercial investors operate in the same way as residential? They view it as that very long-term kind of chip away type of game?
Yeah, look, I think so. I think coupled with the fact that there's a bigger outlay at the start, as we mentioned before, people are wanting to hold that asset or that property for longer just to ensure that they're getting that level of return back or their initial outlay back at least, and that's going to take a lot longer. I also think once people get into a commercial property, they probably realise that they don't have to do a lot with it once they've got it either. They might have a conversation they need to have between themselves and the tenant, every few years just to agree on a few things with a new lease agreement. Mm-hmm. But otherwise, if maintenance is required, the tenant's going to be looking to do that and undertake the works or the cost that goes with that. So I actually think people will stay in a commercial property longer as well.
What we see is with commercial leases, we often have a rent-free period as well, which could be something like 6 months. So again, if you are owning that property...
Like the tenant doesn't pay rent for 6 months.
Exactly.
Wild.
Exactly.
Why is that?
And there's all kinds of other incentives in commercial as well. So, support for fit-out costs, all of these things. And it's based on the understanding that if you're a business setting up your new premises, that's going to take time and you're not going to be earning money during that period. With residential, you walk in, you can live in the property. With commercial, there's a lot of setup involved for a business. So it's basically the lease is seen as a bit of a two-way street in that way. But of course, if you are the landlord, you do want to get that income eventually. So that short-term sacrifice you're making when you're not getting the rent on the property, you want to actually reap the benefits of, providing that incentive to the tenant. So again, that's an argument for why you would want to hold onto that property longer.
What does the data say about who is coming out on top in terms of that long-term growth? Residential property prices are said to double every 10 years. Can the same be said about commercial?
It varies significantly. And similarly, just in the residential market, we know that areas that are seeing stronger population growth, more demand, those areas do see higher capital appreciation. Mm-hmm. If we look at the commercial sector, there are certain asset classes like industrial, for example. We've seen industrial land values perform really strongly over the past decade off the boom in e-commerce, which has led to a surge in demand for industrial space. On the other side of things, if we think about the office market, we've seen values really cool over the past few years, particularly post-COVID. Mm-hmm. So the answer really is that it depends.
We've looked at the numbers, we've looked at the pros and cons, the long-term impacts of both commercial and residential property investment. Josh, what do you think is the better investment?
I don't have the silver bullet. I really do feel like it's going to be dependent on each investor's own circumstances and their appetite to try and understand more. And more about commercial is what I really mean. I think a lot more people, I think they can see commercial over there, but they don't really understand it. We all sort of conceptualise what residential investment looks like. So it's really going to depend on that said client. What are their circumstances? Can they come up with the additional outlay? Do they know enough about it? So I think it'll all come down to their personal preference once they've done their research as well.
And I feel like your answer is going to be the same.
It is the same. It definitely
Geez,
depends.
we're boring, aren't we?
It does. I think it also comes down to how much an investor's looking to outlay. So perhaps you've got $10 million to invest. That's a lot of residential property or maybe just one good commercial asset. Whichever one's going to make you richer also has a lot to do with who that tenant is in the commercial space. If you've got a really good quality tenant, a really strong business that's generating good income, good revenue, that's going to be an asset that'll perform very well, generate a lot of income for you. For residential investors, perhaps the goal is to hold for a period of time and then sell, in which case they might make a good capital gain, but they may not necessarily make a high level of income relative to the value of that asset over the lifetime of holding it. So again, it comes down to your objectives as an investor.
I've really enjoyed this chat. Thanks so much.
Thank you.
Thank you.
Thanks for joining me. This has been Real Talk. For your weekly fix, please follow wherever you listen to your podcasts and tune in next time for more real questions, news and insights on the topics that matter most from realestate.com.au, Australia's #1 address in property. All information provided is general advice and opinion based on current market conditions. These opinions should not be treated as investment advice. Always obtain advice based on your individual circumstances.
Real Talk acknowledges the traditional custodians of country throughout Australia and their connections to land, sea, air and community. We pay our respects to elders past and present.